Welcome back. You're with us on Trading Hour, and the gain in the market is looking pretty smart now. We're looking at a 0.7% increase in the Nifty, and it's actually the Bank Nifty that's doing a lot of the heavy lifting with a gain of about 1%. So good going for the large caps, at least as of now this morning. Day's high on the Bank Nifty as well. Well, speaking of banks, it is time to go across to Abhishek for our special segment, Fin Street. Today, Abhishek brings to you the Q3 report card from the banking system. Abhishek.
Well, Surbi, PSU Banks are on fire. I did say in my Q4FY21 review that PSU Banks have come back, and how their report card for Q3FY23 is nothing short of a record in last 8 to 10 years. In fact, for the banking sector, the report card in Q3FY23 was one of the best that you are seeing in last 8 to 10 years across counts like profitability, asset quality, etc. So let's first talk about operating profits. Now, banking sector saw robust growth in operating profit, up nearly 29.5% YOY and about 11.5% sequentially. You'll be surprised to know that, the operating profit growth of PSU Banks, both YOY and quarter-on-quarter, is better than their private counterparts. PSU Banks saw operating profit growth of 33.5% YOY and more than 11.5% quarter-on-quarter, while private banks, they saw their operating profit growth of 25.5% YOY and about 11.3% quarter-on-quarter. The share of PSU Banks in the pie of operating profits has increased both YOY and quarter-on-quarter. Now, coming to bottom line or the PAT, so banking sector recorded their highest ever quarterly profits in Q3 FY23, which was up about 45% YOY and 11.5% quarter-on-quarter. PSU Banks have been reporting positive profits for last 11 quarters in a row. So profits for the PSU Banks was up nearly 64% YOY and about 12.7% quarter-on-quarter, while that for private sector was up about 32.3% YOY and 10.5% quarter-on-quarter. Profit after tax was aided by the fact that net interest margin expansion was robust and there was lower credit cost this time around. So coming on to asset quality, slippages, you won't believe that PSU Bank's annualized slippage ratio is at a mere 1%. So slippages of the banking sector was down 3.5% YOY and about 4% sequentially. In this, the PSU Bank slippages were down nearly 21% YOY and more than 19% quarter-on-quarter. Private banks saw slippages increase by 14.3% YOY and nearly 11% quarter-on-quarter. The share in total slippages of the PSU banks is now at 42% versus 51% that we had in the same quarter last year. So annualized slippage ratio, which for PSU banks was at just 1% when compared to 1.33% in the previous quarter, and for private banks it was at 2.41% when compared to 2.25% in the previous quarter. The total restructured book of the banking sector X of IDBI Bank is now below 2 lakh crore or less than 1.5% of the loans. We did witness slippages rise for private players, which was largely from the restructured portfolio. On the other hand, the restructured book declined faster than PSU counterparts for private banks. Bandhan Bank is now restructured book free. So in Q3 FY23, the restructured book share, the lowest is for CSB Bank, Kotak Bank, Axis Bank and SDFC Bank, while above 5% on the higher side, we have DCB Bank, Karnataka Bank and Indian Overseas Bank. Now to some glitches in Q3 FY23. YOY operating profits declined for Bandhan Bank, DCB Bank, RBL Bank and South Indian Bank. On a sequential basis, the operating profits declined for IDBI Bank, Karnataka Bank, PNB and South Indian Bank, while Tamil Nadu Mercantile Bank is the only bank to see loan book decline sequentially. Back to you.
Abhishek, thanks a lot for bringing us that complete snapshot of how banks have fared in Q3. This is something we've been talking about as well, right? That the Q3 earnings was really held up by what we saw come through from the financials. But on that note, we do have to get into a short break on the show. There's lots more market action coming up in just a bit, so stay tuned.